Good evening and welcome to the Earnings Review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from Hampton Studios in Harare, Zimbabwe. I'm Ibn Mabunda, yo money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with the most competent analysts on the market just to ensure you're finished with relevant and comprehensive market analysis. Tonight, we focus on Lafarge Cement Zimbabwe, a listed cement producer on the Zimbabwe Stock Exchange. Now, Lafarge is one of Zimbabwe's largest cement producers, having been in operation in Zimbabwe for over 60 years. A quick look into their products as well as their operations. Lafarge offers a wide range of cement as well as allied products which are used in construction projects. These range from aggregates, the very cement itself, as well as dry mortar products. In addition, Lafarge also produces lime products which are used in the agricultural sector. Lafarge employs over 800 people and creates employment opportunities to thousands upstream as well as downstream across its value chain. Lafarge has an installed capacity of over 500,000 metric tons per annum. Notably, Lafarge is a subsidiary of Lafarge Cement, which is headquartered in Switzerland. A sneak peek into the firm's timeline: Lafarge has its operations dating back to 1956, wherein it operated as the Salisbury Portland Cement. At that point, it was owned by a UK-based Associated Portland as well as Manufacturers Association. In 1980, the firm would go on to list on the Zimbabwe Stock Exchange. 1982 would be a key year for the firm as it was rebranded to Circle Cement in line with changes at its parent in the United Kingdom. 2007, as several changes would take place, this would see Circle Cement officially changing its name to Lafarge Cement, as there had been changes in as far as the ownership of the firm is concerned. This very firm is also known for several projects, including the Kahora Basa as well as the Lake Kariba, particularly the dam, which has been a landmark project not just in Zimbabwe but also in the region. Notably, Lafarge has two mining operations wherein it produces limestone here in Zimbabwe. A sneak peek where the group is concerned: the group has a presence in over 80 countries while employing over 81,000 people across the globe. The firm operates from over 2,300 sites which are spread across the entire world. Lafarge Cement is listed on the Swiss Stock Exchange as well as the Euronext in Paris. Some vital stats where Lafarge Cement Zimbabwe is concerned: with a current share price of 600 cents, the group has a market cap of over 480 million Zimbabwean dollars. The stock has moved over 230% since the year started, vis-a-vis a consumer staples which is up over 537%. Comparatively, the ZSE All Share is up over 550% to date. Now, on the cards where this firm is concerned is a $2 million plant which is expected to do two things for the firm. One, increase operational efficiencies as well as improve the capacity of the firm. Now, earlier we had a chat with the group chief executive, who is Ms. Precious Nika, to discuss how the operations of the firm are concerned. In just a moment, we take a look at that very conversation with the group chief executive, Precious Nika. Now, don't go anywhere. And now joining us on the earnings review is the chief executive for Lafarge Zimbabwe, Precious Nika. Precious, good morning and thank you for joining us on the earnings review.
Good morning, Ibn. I'm excited to be here.
Fantastic. To cut to the chase, this conversation is coming several months after your assumption of captaincy of this very ship in Zimbabwe. What has been the experience like for you, as well as what can we expect in terms of strategy during the tenure of your leadership at Lafarge?
Thank you, Eben. So, I took on this role in March of this year. And I think one of the biggest challenges that lay ahead of me taking on this role was the COVID-19 pandemic. And I think that's the thing that I worried about the most. But going into it, I think that the COVID-19 pandemic has presented more opportunities for our business than challenges. And I think it's really been an exciting journey for me to be able to see those opportunities even before they manifest, and be able to take advantage of them way in advance for the business to continue to thrive. And I think our teams have also done a lot of fantastic work in order to prepare the business for this pandemic. And I think we've dealt with it in a fairly impressive manner, in my view.
Fair enough. Just to sort of get into a little bit of financials, I will make reference to your most recent results, just to get a feel of how you have navigated and how you're navigating the Zimbabwean waters. Your revenue there scaled 100% over the past year. Just in a nutshell, can you shed light in terms of what informed that performance, and perhaps how you're navigating with the economic headwinds playing out in Zimbabwe?
Yeah, so in 2019, we went into the year with a very aggressive growth strategy, and we focused on four key areas in order to deliver our results. And the first one is around winning at the customer side. And for us there, we were focusing on ensuring that we deliver new products into the market that could drive business growth. We were focusing on improving the quality of our products and improving our portfolio into the market. And we were also focusing on improving our service delivery as well. And so on the market side, we saw significant growth in volumes coming out of new business that we generated. And then we also focused, secondly, on building sustainable industrial performance, which is ensuring that our plant is efficient, running efficiently in a cost-efficient manner, and also ensuring that we're able to deliver quality product. And through the interventions that we took in 2019, we were able to see significant improvements in our plant performance. And I think we were then able to capture a lot of the demand that was on the market as a result of that. Thirdly, we focused on building financial strength. I think one of the key things that have always impacted our business has been our margins. And we decided in 2019 to take control of our costs and to focus, on reducing our costs in order to improve our margins. And I think a lot of work was done on that very successfully. And you can see in the 2019 result, the impressive growth in our profit margins for the year. And then going from there, we also focused on our people and our teams, because our people are really the asset that gives us the competitive edge on the market. And so we focused on building winning teams and ensuring that we had a team that was motivated to be productive, and also retaining our key skills. And I think that with the focus on those four pillars, we were able to deliver impressive results for the year 2019.
Now, as follow-up, you mentioned new products. You also mentioned new business. How strategic are those developments in terms of cementing your position in the market? And how worried are you by your competition, PPC, as well as perhaps other players who are also eyeing the Zimbabwean market?
So the new products are very strategic. Today, our business has been big on cement. Yes, we were doing some other complementary products, but it was at a low scale. But the scale that we are operating at now and pushing to get to in the coming years, when our new plant is fully online, will help us to increase our offer to the built environment. So we're not just offering cement, but we're offering the full range of products that you need construction. And that makes us, a supplier of choice and a one-stop shop for construction materials. And for us, that's a very strategic position to be in. And we also believe, by the stance that we have taken to put in a new plant that will improve our capacity on the dry mix mortar products, we also allowing the country to produce its own products locally and reduce the amount of imports that have to be made for the finishing range of products in construction.
I will take you up on the subject of the new plant, an interesting development. Can you zero in terms of your finance costs that are actually denominated in foreign currency? With the market vagaries playing out in Zimbabwe, shortage of foreign currency, how are you sourcing for that forex?
Before the central bank issued the monetary policy that allowed business to trade in US dollars, our business, like all other business, would essentially go to the banks to seek to secure foreign currency. And I must say, it was not an easy process, but we always did get the support in the end. We never got to a point where our business came to a halt because we had delays. I mean, sometimes we would wait to get foreign currency for 3 to 4 months, but we never got to a point where we absolutely, did not get money from the central bank to run our operations. And then, of course, when the new monetary policy was issued and business was allowed to trade in foreign currency, we saw huge growth in our USD sales to the point that in the month of we were over 60%. And because of that, we've been able to generate enough US dollars to meet our foreign currency needs and also to be able to pay for our commitments that we have outside the country.
Fair enough. And talking about commitments, what's the status on the $15 million legacy debt with the RBZ?
So I'm happy to say that we managed to get a commitment from the central bank to cover part of our legacy debt. And we are now waiting for them to issue the financial instrument that will support that commitment. I am reliably informed that this process is almost complete, and we should be expecting in this month or the coming month to receive the financial instrument that will support that commitment.
Interesting. Now, let's talk about the pandemic. Earlier on, you mentioned opportunities that have arisen in this COVID era. What has been the impact of the pandemic in as far as your operations are concerned?
I think for our business, we saw the biggest impact during the lockdown, because at that time we were unable to produce cement and we were unable to sell for 25 days. But we were able, however, to produce agricultural lime because agricultural products were deemed to be essential products. Essential services, so we continue to produce that. So you find that our performance for April, for the month of April, was significantly impacted. However, our business managed to bounce back once we started operating, and I can tell you that where we are today, where our volumes are just 4% behind where we were in the previous year, and for us that's a strong comeback. Given that we lost, almost a month of trading during the lockdown. So I think the business has done, has been fairly resilient in the COVID-19 pandemic. And we're also seeing that cement demand has remained strong despite the pandemic. Month on month, demand has not come down in the year. And so that keeps us hopeful that, we will be able to exit the year in a strong position. What you also see is that our business had to change in terms of how we serve our customers. And so we took a number of measures to ensure that we reduce the interaction between ourselves and our customers on site. And so we had to innovate, and we came up with a new tool called Lead Retail, which allows our customers to place their orders and track their orders and pay us through an application and get seamless service from us without having to come to our site and expose themselves to risk or expose our employees or vice versa. So I think on that, the COVID pandemic has forced us to innovate how we serve our customers in order for us to stay in the game.
Can you tell us a little bit more about your digital platform that you just mentioned now?
Yes, so the digital platform is called Lead Retail. Like I said, it's an application that allows our customers to place orders and track their orders, to know where their orders are, at what point, when they can expect the delivery, and also, to make their payments and track what is happening with that. So it's an integrated, customer service application. It is also supported by a customer service chatbot, which has allowed us, to reduce the number of people that we needed to sit in our call center. This chatbot can respond to over 1,000 people at the same time. And essentially, it is built on algorithms that that our customers call us to ask, which is, how much is your cement? Which products do you have? How do I become a franchisee of Lafarge? How can I get a job in Lafarge? And also, how do I get your aggregates? Do you deliver? So all those questions are built into the chatbot, and our customers just, chat with the chatbot, and they get instant responses. And that has really given us an edge in customer service like never before.
Sounds exciting. Precious, given the uncertainties that are playing out in Zimbabwe, that of course have been exacerbated by the pandemic, how are you mitigating risks and preserving value?
So in Q1 of 2020, we took a decision to focus on three things to beat the pandemic. And the three things were health, cash, and costs. And on health, we decided to focus on reducing the impact of the COVID-19 pandemic on our employees. And so we took a number of measures to raise awareness around the pandemic, mitigate the risk by, putting in place measures to test employees, to sanitize, to decontaminate the spaces if at all we had people that tested positive, and also measures to ensure that if our employees did get, infected with COVID-19, we could support them at home with drugs, and also with, psychological counseling during the process. And I think that program has worked very well since the COVID-19 pandemic started, and our employees are seeing great value in it. The second thing we focused on is costs. In a pandemic like this, you want to ensure that you can focus on the things that you can control. And what we can control is our costs. We may not be able to control the market, but we can control our costs. And so we focused on reducing our costs to focus on only essential costs that just keep the business running. And that has helped us to stay afloat during the pandemic and to improve our margins significantly in the year. And then finally, we focused on cash. in a pandemic like this, a lot of companies do not make it and they go down, and you need to be able to secure your cash. You need to be able to also make sure that you have enough cash to keep the business running. And so we put in a lot of measures to manage our creditors and to ensure that we had sufficient cash to keep the business running, and also to ensure that we had less bad debts in a pandemic period such as this. Yeah.
Fair enough. And of course, there are issues to do with power here in Zimbabwe. What measures have you in place to ensure that your business keeps running?
I must say, 2019 for us was a difficult year with regards to power. Our business faced significant challenges in production as a result of power cuts. But so far in 2020, the power supply has been fairly stable. I would lie if I say I even can remember a day when we lost power completely. I think we've had power surges, maybe voltage surges and power dips, but not necessarily, any power challenges. However, as a business, because of the challenges we faced in 2019, we invested in power generators to ensure that whenever we lost power from ZESA, we were able to keep the plant running on the generators that we have. And I think that has created a bit of comfort to our teams in terms of their ability to continue to run the plant in the event that we do have power cuts in 2020.
Okay. Precious, there have been concerns that have to do with dust emissions in some of your operating sites. Can you shed light in terms of what you are doing to ensure that your operations do not impinge on the environmental stability of the environments that you operate in?
Before the year 2018, Lafarge Zimbabwe did have significant challenges with dust emissions. But in 2018, the company invested in a $6 million dust abatement system, which is called an electrostatic precipitator, which essentially traps 99.9% of the dust that is generated in 99.9% of the dust that is generated in our operations. However, this system is impacted by power dips or power surges or power cuts. So if the power drops, the system stops working, and you find that at that point, dust does go into the atmosphere. So I think, intermittently, we do have those challenges, but right now, we are working every single day to ensure that we reduce the dust emissions coming from our plant. And if you were to visit our plant today, you would see significant improvements. You would almost think that the plant is not running because, the stack is looking clean and the guys are working to ensure that as much as possible, the dust abatement system works efficiently and very little dust goes into the atmosphere. Our dust emissions are well below the regulated limit. Actually, we don't even focus on the regulated limits anymore. We really just focus on ensuring that there's very, very little dust going into the atmosphere. And I'm really open, as a CEO to feedback from the community on how we're doing and whether we're making progress from their point of view, because it's important for me that they see progress in what we're doing and that, they see that we're taking this issue seriously as a business.
Still talking about investment. Several months ago, we came through for the official opening, of course, for the new plant, which is a $2 million DMX equipment that is expected to ramp up your production and improve your efficiencies. Can you shed light where that is concerned, and perhaps give us an update with regards to the issue to do with the completion thereof, because I think you had initially intended to have it completed by half year, but there seems to have been some indications that perhaps we could expect that in the close of the second half of 2020.
Very exciting development there for our business, Eben. Yes, we did launch, this project some months ago, expecting that by end of July, the new plant would be online, and the market would start seeing more of our products on the shelves. Unfortunately, due to COVID, our contractors who are doing the installation of the plant were unable to travel to Zimbabwe, and so we had to start the project, using local contractors, some installations around the silos, etc. And our contractors have finally been able to travel, and I really thank the support that we got from the Ministry of Industry and Commerce, to allow the contractors to come on site and finish the installation of the plant. So we expect now that by the end of the second half of 2020, the plant should be fully online and ready to boost production into the market. We are expecting our production to go from the current 7,000 tons per annum of dry mix mortar products to about 50,000 tons per annum, and that's significant for us.
So, Precious, as we wrap up, what is your outlook perhaps in the next 1 to 2 years?
In the next 1 to 2 years, is really focusing on growth coming out of the dry mix business. This is where we have, capacity increase that I just spoke about, and we expect to be launching new products into the market, and we expect to be seeing a significant growth there. We also our projects on affordable housing, and we are looking to contribute our part in closing the 1.2 million housing backlog in the country. And so we're looking at new technologies that can help us to do mass affordable housing for the people of Zimbabwe. And I think, those two for me are perhaps the biggest contributors that we will see changing the face of our business in the next year. And beyond that, I think we'll have a different story to tell.
Thank you, Precious. That was quite comprehensive. Thank you for making the time to be with us on the Earnings Review. That, of course, was Precious giving us detail in as far as the operations of Lafarge are concerned. Now, joining me for an analysis of their operations is our very own Chief Analyst at Equity Access, Respect Kwenzi. Respect, good evening, and thank you for joining us on the Earnings Review.
Always my pleasure. Thank you, Eben, and good evening to you too.
Fantastic, thank you. Now, some key issues there that Precious did make reference to, and I just want us to have a breakdown of some of these issues. But let's start by having a look at the competition and how the sphere is organized as far as cement supply is concerned in Zimbabwe, and how important a role that Lafarge is playing vis-a-vis the backdrop of the competition that it faces in that very sphere. Can you give us a breakdown of the trends that are playing out in that very sphere?
Yeah, so Lafarge is one of the biggest producers of cement in Zimbabwe, but the biggest player there is obviously PPC. They recently almost doubled their production when they opened the Harare plant. It pushed their production levels to above 1 million in terms of tons per annum. And in terms of Lafarge, the contribution in terms of the overall production, it's almost a quarter of the total. And in there as well, you've got also Senozim. You also have got a fourth player in that sphere. So this is how the cement market in Zimbabwe is arranged. PPC actually also exports to some of the African markets, which are mainly in the southern side of Sub-Sahara. So basically, this is how that the supply of cement is structured. Now,
given the fact that we've got a 1.2 million property backlog here in Zimbabwe, how much of a role would Lafarge have to play in meeting that demand?
Yeah, so housing is among the overall. It is among the overall in terms of demand for infrastructure that Zimbabwe is looking at. Obviously, that backdrop is quite significant, but the construction backlog in general is far much higher. But I think looking at that deficit, definitely it means that there's always going to be a need to keep on referring to cement manufacturers in terms of supply. But then as long as economic growth gets to be slower, you also get to realize a slower rebound in terms of construction of housing in Zimbabwe. So Lafarge and other players definitely will have a role to play in terms of ensuring that Zimbabwe's construction sector rebound. So they do have got a contribution which they have to make in that sphere.
Now, a key development, they have had some of their foreign obligations that have been met, a significant chunk of them, and also the RBZ has assumed legacy debts to the tune of 15 million United States dollars. How important is that for this very firm, and also what can we expect in as far as how RBZ is actually handling these legacy debts?
Yeah, it is a welcome development. In a hyperinflationary environment, if you're holding debt which is FX denominated, it actually means that you get to realize FX losses or FX losses on your balance sheet. So by implication, it affects or it dilutes your profitability. So most companies and those who have had liquidity in terms of Forex, they have been quick to extinguish part of their external debt. And for Lafarge leveraging on its parent, it has been quite swifter for them to clear some of these debts. It also helped, like I said, cushion the bottom line position. So in as much as your sales levels may not move up as much, but if you do concentrate on realigning your costs, which obviously gets to involve your cost of funding, it also helps in terms of cushioning the profitability. So I think even going forward, it's going to improve on their margins.
Well, thank you, Respect, for the perspectives.
Thanks.
Thank you, viewer, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. Remember to catch us every Tuesday, every Thursday, 7 p.m. Central African time on this very platform. Even Mabunda from Harare, this is Equity Access.